Welcome to GRE. I'm your host, Keith Weinhold. Nearly 2 months ago, we saw the end of the national eviction ban. Now that non-paying tenants can more easily be evicted again, why hasn't there been a big wave of evictions? I've got answers here. More on the rapid rate of rent increases today. And nearly a year ago, today's guest made a prediction of a housing price crash this year. I'm going to ask him what happened to that. It's the return of Ristad real estate advisor Ken McElroy and I today on Get Rich Education. You can get a 50-year-old house somewhere or buy a new one directly from the builder with tenant-resilient amenities already built in. With over 3,000 Florida units at different construction stages, they are exclusively for investors. President Wagner and Alaska and team also invest strongly in their own product. That's belief. Start at buildtorentdirect.com. That's build the number 2 rentdirect.com or text 407-927-5074. Hey, is your IRA in a real estate syndication? Yikes, a 37% UBIT tax could hit you, but you still have a chance to set up your EQRP and avoid this. Did you make too much money in 2020 and need more deductions? Now federal law lets you set up an EQRP in 2021 and get deductions for last year, retroactively. Even put old IRA and 401k money in Bitcoin, gold, or your own business. Get control of all of your retirement money, tax and penalty free. Text EQRP in all capital letters to 72,000.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
You're listening to one of America's longest running and most listened to shows on real estate investing, also bringing you a steady dose of real estate economics and wealth mindset. Entering into our 8th year of weekly episodes, this is Get Rich Education. I'm your host, Keith Weinhold. Before we bring in Ken McElroy for the latest on how he and I see today's income property market, you know how I like to discuss how higher rates of inflation impoverish consumers, but actually enrich real estate investors, and measures like the CPI and PPI are common ways to measure inflation. But sometimes these informal measures are more interesting. Recently, that store known as the Dollar Tree has been feeling the effects of inflation. So they are currently rolling out products above $1 across all of its Dollar Tree Plus locations. You know, I guess that you really should be paying more than $1 for a glass candle holder or a little pack of gummy bears, right? On an inflation-adjusted basis, I guess $1.30 isn't any more than $1 was just a few years ago. But you've got to love the PR spin on a lot of these things. About the increases of items selling for more than $1 at the Dollar Tree, a company spokesperson said, quote, "We believe testing additional price points above $1 for Dollar Tree products will enable us over time to expand our assortments, introduce new products, and meet more of our customers' everyday needs." That's the end of the quote. Kind of funny. The translation there is that price increases are always good then, right? Yeah, and I like how they use the word they're testing those price points. Oh yeah, I'm sure all the prices will come back down after the test is over with. Just like Nixon temporarily depegged the dollar from gold, right? I've seen some dollar stores over the past few days here. I am currently making a real estate field trip through the deep south of the United States. Coming in from New Orleans the other day, I drove through the state of Mississippi and arrived here where I am today. I am in the heart of Birmingham, Alabama, at the classy Elliton Hotel. This is the largest city in the state with nearly 1 million people in the metro here. Because Birmingham is a GRE investor city, and Huntsville, Alabama is the only other GRE investor city here in this state. Although you can also find cash flow in nearby places like Bessemer and a satellite city here of Tuscaloosa to the west, which is where the famed University of Alabama is. But getting back to Birmingham, where I am today, Birmingham is the only place in the world where all of the ingredients for making iron are present. You've got coal, iron ore, and limestone all within a 10-mile radius. Well, an economy is what supports a real estate market, and steel doesn't quite play the prominent role in Birmingham, Alabama's economy like it used to. One leader in the economy here is biotechnology and medical research at UAB, the University of Alabama at Birmingham, and its adjacent hospital. Banking and communications are two other important sectors here. You don't quite have the major pro sports teams here like Major League Baseball and the NFL. But in fact, Birmingham is the 49th most populous metro in the United States.
Sweet home Alabama.
Sweet home Alabama. Well, not my home. I'm a northerner from Pennsylvania and Alaska, but Birmingham here is also known for barbecue. What's important for real estate investors here is that the state of Alabama has the lowest property taxes practically that you'll find in any investor advantage state in all of America. But Louisiana's are pretty low too. So are Hawaii's, but that's definitely not a cash flow state. So Alabama, it's where you have a low cost of living. As an out-of-state investor, you get a high ratio of rent income to purchase price, and you get the benefit of paying the low Alabama property tax as an out-of-state investor when you own here. That is a giant reason why these places are so advantageous for cash flow, like Birmingham, Huntsville, Tuscaloosa, Hoover, Bessemer, and some other nearby places. That's what I've long found attractive about Alabama, and that is exactly why I am here today. I am going to meet with the extraordinary local property provider in just a few hours here and shoot some videos with them, and we're going to get inside some properties. And then in a few days, I will be back in New Orleans at the terrific New Orleans Investment Conference. I hope to see you there. If you want to get started with Alabama income property, like I said, there are 2 GRE investor cities here. Get started at getricheducation.com/Birmingham or getricheducation.com/Huntsville. Let me tell you a little something about this real estate trip through the Deep South. Set up your life so that you can afford the time to drive some places. You don't have to fly, and you can take your time. You know, I think that when you are just out of high school, say you're 19 years old, and you don't have a lot of money, it seems to you that, I don't know if I can afford to fly there. Money is scarce, so I'll drive. When you invest in real estate strategically, now you're getting ahead. After a few years, money is not going to be such a scarce resource, and you start to value your time. I am a geography guy. I want to take my time to drive when I travel and not have to fly over absolutely everything. Set up your life so that you have an abundance of time so that you can then afford to take the time to drive if you want to. Income opens up the time. Affording the time to drive, that is really 180 degrees from how you might have thought when you were 19 or when I was 19 and you were wondering how you could afford to fly, which is the opposite thing. Now, being that geography guy that I am, one of my degrees is in geography, as you probably know by now. It is just a humble bachelor's degree. I made a 5-hour drive from New Orleans to Birmingham yesterday, and I'm going to take the long way back to New Orleans tomorrow, a 6-hour drive, because I want to stop in and check out Montgomery and Mobile, Alabama tomorrow. So what I do when I plan a trip is, look, I'm not interested in rushing anywhere a lot of times. I will make a 5-hour drive take 12 hours because I want to stop and see stuff, right? Again, set up your life so that you can afford the time. What do most people do? Especially guys, it seems, are like this. When they make a long drive somewhere, if anyone else is in the car with them, they're like, we are driving 6 hours and it's going to be 6 hours straight. If I've got to stop the car one time for you, I'm sure not going to be happy about it. If anyone has to go pee really badly, well, from the point that it hurts you so bad, you then need to hold it for another hour from that point, and only then maybe, just maybe, will I stop this car. I mean, geez, calm down. Take your time. Life is about the journey just as much as the destination. Look, I am the polar opposite of the no stopping at the restroom guy. Now, gosh, and this is so me. I looked on a map just before this trip. I saw that the way from New Orleans to Birmingham cuts through a lot of the state of Mississippi, and I saw that the highway skirts along the DeSoto National Forest. And most people would think, so what? And just keep zooming on by. I mean, what? It looks like a bunch of dumb trees, and they would just keep driving on the interstate. But to me, I see that on a map beforehand, and I'm like, what a great way to stop and see a slice of wild southern Mississippi, the DeSoto National Forest. I am going to stop the car there, go off on some side road, take my shirt off, and go on a 1-hour trail run. I don't care if I twist my ankle on some cypress tree roots. That was cool just to explore and get out and run among the cypress trees. I don't care if a southern Mississippi alligator bites my calf off out there and I am maimed for life. At least I got out and did something. At least I saw a new slice of this very world that I live in. Yep, I am going and doing. Well, that's exactly what I did yesterday in Mississippi's DeSoto National Forest. Not exactly. Not everything. I didn't see any alligators, so I am not really physically maimed for life. And to most people, they are just flying by. Cruise control, 82 miles an hour, just looks like a bunch of dumb trees to me over there. Well, maybe those people are going nowhere fast. Oh, life is to be enjoyed, not endured. So, getting back to real estate in Alabama, to make it actionable, get the provider report, connect with that provider, and then you can start checking out some Alabama income property. That starts at getricheducation.com/Birmingham and getricheducation.com/Huntsville. Let's catch up with my good friend, Ken McElroy. I'd like to welcome a very familiar guest onto the show. He's one of the most recurrent guests in GRE history. He is the Rich Dad real estate advisor, and he's written so many influential books, both inside and outside of the Rich Dad series, like the foundational tome, The ABCs of Real Estate Investing. I've been in this real estate world for quite a while now, and this guest really, he is one of the more giving guys in the entire industry. Welcome back to Get Rich Education, Rich Dad real estate advisor, Ken McElroy.
Keith, always great to be on the show. I love spreading the message.
Yeah, well, you've been helping our followers with that for quite a long time. So let's kind of start at the beginning here. We talk about housing and the climate that we're in today. You predicted a housing crash to take place this year. And I think people have different definitions of crash. Some people think that that means a price correction of as little as 10%. But how do you define a crash and kind of what are the causes of what's coming here, Ken?
Obviously, I'm a little off on the crash. So I've been getting some feedback on that, and well-deserved. When I first came out and predicted it, none of the stimulus money and the continual stimulus money, and, we're going to get into the inflation piece. I know you and I did not foresee that we were going to turn the printing presses on and bail everyone out and send so much money to people. I'm not saying they didn't need it. I was basing it off of 2008. They did say, you don't have to pay your rent, you don't have to pay your mortgage. And those are true things. And that ended, as you know. So the forbearance piece is going to be kind of staggered. And the eviction thing was overturned at the Supreme Court, which is awesome. The only difference between that and now is that now these people have to pay. So, they have to actually pay their rent and they actually have to pay their mortgages. So who knows what's going to happen with the balances. So I still do think, Keith, that we have millions of people that are in bad financial situations around owed rent and obviously own mortgages. I think that's going to make its way through the system. So I might be a year off, but I still think we're already seeing corrections in some markets.
The pace of price bidding wars on homes has certainly slowed. And hey, if you're right, but the timing's a little off, you can still be right, because I think it's more difficult than ever to make predictions with the government getting involved in keeping everything afloat. I think the short story is they really don't want to see people kicked out of their homes, whether it's a home that they own with forbearance or a home that they rent with the eviction moratorium that annoyingly got extended over and over and over again. But it's been since August 26th that the CDC eviction moratorium expired. But since then, we've kind of seen eviction numbers that have been flat or down, and that's kind of confounded some people. So do we think the pace of evictions is going to be a more diffuse condition, or do you think that there's still a big wave that's going to hit? What are your thoughts with respect to the expiration of the eviction moratorium, Ken? Something key for real estate investors in our income stream.
So you're right on all the dates. The truth is, if most of the professionally managed properties kind of had most of the delinquent rents, the people that couldn't pay, well communicated to and figured out. We were still buying during that time. We bought 2 properties, and each property had anywhere from 200 to 300,000 in delinquent. The numbers are real. And I think what happens, Keith, people that owe, let's say 8, 9, 10,000, 20,000 in rent, they're not going to pay it. And all they have to do is go find somewhere else to move and then fight with their credit. If the landlord turns them over to credit or whatever, and they go to collections or whatever it might be. But the bigger issue is more on the forbearance. So I never said, and I still don't think, that the eviction moratorium is going to create this massive disruption at all. We had the same kind of stuff happen in 2008, as you know. It was very different, but we had a lot of people lost a lot of savings. And what's tempering things is just like what happened in 2008, even though it's different, is that people that now have to pay their mortgage, as you know, we're starting to see listings go up. And as supply goes up, then price wars go down and even potentially negative. It's going to be interesting to see how far that goes. But a lot of those people are going to sell their homes, scoop the equity, pay off the debt. Hopefully they can. And then they're probably not going to re-enter into the housing market. They're probably going to re-enter into the rental housing market.
We talk about tenants and the health of our tenant. That's clearly really important. And now that things are developing with the eviction moratorium expiring, at least the CDC's on the national level, we're trying to find out what happens with those tenancies. Now, some eviction filings have gone up from their pre-pandemic levels, like what's happening in Gainesville, Florida. But in many parts of the nation, these eviction filings are the same, or they've even gone down since the expiration of the moratorium. And economists and industry experts, people like me, myself, are trying to figure out why that is. We need to remember that courts handle cases differently across the country, and some courts might be backlogged. So that would make for a more diffuse condition of these evictions taking place. And we need to remember, of course, and you're aware of this, Ken, some areas of the nation still have protections in place, annoyingly, like New York, whose eviction protections run into January 15th of next year. And also some tenants might have just moved out on their own in order to avoid eviction. And unfortunately, there are some tenants that aren't even aware of their rights, and they will just move out if a notice is posted on a door and they aren't even aware that something like a court case needs to take place to get evicted. I think a few tenants, but yeah, it's clearly in the minority of tenants like we've discussed, Ken, a few tenants that might be a few months late, well, maybe they will pay to stay in the place that they're in because they got unemployment compensation dollars while they were staying at home. I think another thing to keep in mind is the way that some judges have interpreted the CDC eviction moratorium. They didn't like it very much like we didn't like it. So I know that in states like Ohio and Texas and Tennessee, judges kind of barely enforced that eviction moratorium or ignored it even while it remained in place. We still got government aid that might be reaching some people that hasn't been distributed yet. So do you have any more thoughts with regard to what might happen with the expiry of the eviction moratorium? I'm giving a lot of reasons for why this might get stretched out for quite a while.
All those points are valid. Every single person is different. If you owe a year of rent and you're following the eviction moratorium, you're just going to move. So the filings are for the people that refuse to move that still owe. A lot of people, when they come to that end, they're going to, okay, and they're going to owe and they're going to move out owing. But the next step is obviously evictions, which you're correct in all those cases. A lot of landlords and a lot of judges and, things are moving along still. There's this big pent up number that haven't been. I've been through this before. It's not going to be a train wreck. People are going to move, and the ones that aren't going to move are going to have to, depending on the state laws. In Arizona, you can literally get somebody out within 30 days. Now, I know every state's a little bit different. You don't need a judge to file. You don't need a judge to start the process and post on the door and all those kinds of stuff, all those kinds of things. So once those things start, it's just like most people aren't going to go down with the ship. They're going to say, hey, I'm going to bail now. Like, I'm not protected anymore under the CDC moratorium. The courts are going to get backlogged. There's no question about that.
Yeah.
But I don't think it's going to be as big as everybody thinks that it is and what the media has been saying. And it's not going to be massively disruptive. And I don't think either. Who's going to win are going to be the collection companies.
You're right about that. So I think we're concluding that, yes, this will cause some pain, but I don't think there's going to be a sharp spike in evictions myself anyway. It is a factor, but it will be a more diffuse condition for some of these reasons that I mentioned. This really underscores, Ken, the importance of investing in landlord-friendly markets. You mentioned Arizona, where it might take 30 days to evict a non-paying tenant. That's fairly landlord friendly. I mentioned the way the judges have been interpreting the CDC moratorium in places like Ohio, Tennessee, Texas, 3 more generally investor friendly states where you can get prompt evictions under normal circumstances. You bring up something really interesting, Ken, with us coming off this eviction ban. You talked about you getting under contract on 2 buildings and there being a number of delinquent tenants. I think my thought then, Ken, is how does an underwriter in borrowing, how do they interpret that when you've had delinquent tenants and they haven't been paying the rent, and yet you're trying to get under contract for a building and trying to demonstrate an adequate debt coverage ratio, for example, yet you have some of these delinquencies?
There's a couple things. One, if you back up even more, actually, we closed on 2 and we have a third in escrow. So let's see, 648 units for the 2 and another 455 units.
Congrats.
In Austin, that we have an escrow. All of them have north of 200 in the low 300s in delinquents. When I'm underwriting it, the seller is the one that's actually jeopardized. So we're underwriting it not as if they've been collected. We've underwriting it as if they haven't been collected. It's not that I'm taking on that risk. The seller is actually taking on that risk by having a lower NOI. And so that lower NOI that I underwrite to is the same one that the lender underwrites to. So that's why, interestingly enough, if you can find buildings that are high and delinquent and you can buy it for how the property's operating today, it actually benefits the buyer.
Sure, it's a benefit to have it appear that delinquencies are just no income.
Yeah,
you're not.
Yeah, I mean, think about no eviction moratorium. Isn't that the perfect property to buy? Like 2 years ago, before all of this nonsense, I would always look for properties that were mismanaged, high delinquencies, high turnover, high vacancies, a lot of maintenance needed. So the government just created this one. Sometimes it's the actual landlord. So those broken projects are the best assets to purchase. And so for us, we were excited because we know that at some point, the moratorium is going to end. Whether the people pay or not, it's a check the box issue. Great if they do, great if they don't. But there's no way that I would say less than 10% are going to pay. They're probably at least 90% are going to move. If a tenant has $20,000 or $30,000, they're not paying the landlord.
They're
moving.
Short that much.
Right. If they're behind a month, they're probably going to figure it out. But I'm talking about stuff that is well over a year. So we actually account for that before we even make an offer. So it's really the seller of the property's issue.
That's right, because a savvy buyer, they want to see some meat on the bone. They want to see some opportunity into what they're buying into. And if you can close that delinquency gap, that's effectively arbitrage. That's profitability. Yep. And the time to close the delinquency gap is after the eviction moratorium has expired.
That's right. So how can the seller argue that? I'm like, well, they owe. How can you underwrite a property and showing it? You've got an occupied unit that's not paying, period. It doesn't matter like at what stage. So it gets accounted for in less income and less net operating income. They're great opportunities to buy these properties if you can hold on. And of course we bought during and before we knew what was going to happen at the end of the moratorium.
Evictions are a bad thing. I don't want to understate that. It's not convenient for the landlord. It often ravages families. But I've actually got a bright spot in evictions when you can actually get one today. You're listening to Get Rich Education. Our guest is Rich Dad Real Estate Advisor Ken McElroy. More when we come back. I'm your host, Keith Weinhold. The people that our listeners can't stop talking about are Ridge Lending Group, NMLS 42056. They've provided GRE listeners with more loans than anyone, and it's where I got my last few loans. They finance single-family income property up to 4plexes. They're the #1 lender for beginners and veterans. Start your pre-qualification, chat with President Chaley Ridge personally, and get your custom plan for expanding your cash-flowing portfolio. Start at ridgelendinggroup.com. A lot of investors choose either cash flow or home price appreciation, but one real estate market could provide both: Jacksonville, Florida. They've got 27% lower home prices and higher rents than the national median. Their market has appreciated 34% more than other comparable cash flow markets over the last 30 years. Get positive cash flow today and above average appreciation for tomorrow. They often have available inventory in Jacksonville, if you can believe that. Start at cashflowandgrowth.com.
This is Paradigm Life's Patrick Donahoe. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. You're listening to a show that's created more financial freedom for busy people just like you than nearly any show in the world. We've got a repeat, returning, excellent guest, Ken McElroy. He's a Rich Dad real estate advisor. Ken, we're talking about evictions before the break. Okay, that's generally something that we don't want to have happen. But you know what's interesting, Ken? When a longtime real estate investor realizes that it's actually difficult to get steep rent increases on incumbent existing tenants that have lived in a property for a few years. But now when we do have a turn, whether that's an eviction or for some other reason, today we might be able to get a rent 10%, 15%, or even 20% higher because we've seen such substantial rent inflation. So I'm trying to find a silver lining in the eviction cloud here. That gives us an opportunity to turn the unit and really get substantially more income than we ever could, maybe even greater than the rate of inflation at this point. So tell us some more about your thoughts about rent inflation and how much of it that you're seeing because you control thousands of units across the nation.
Thanks, Keith. Just to finish up on this eviction thing, obviously, my company, we have about 10,000 tenants. We rarely evict people. Like, we didn't really have a big issue, our company, because of the tenant that we put in there. That's the way things are supposed to work. Like, when you buy a car, you're supposed to pay for it. When you rent an apartment, you're supposed to pay for it. And if you let people in that can't, then you work with them. And so the ones that worked with us, Keith, we would never evict. So we have people that are making payments and all that kind of stuff. I'm only talking about the people that don't communicate, that literally aren't trying to work with anybody. So I just wanted to finish with that point, because the last thing we want to do is displace people, and people's lives have been disrupted, and it's to our benefit to sit down and work with them and meet them where they are. I just wanted to say that before I jump into the next piece on the rent inflation.
Yeah, that says a lot about your screening up front and getting the right tenant in the first place.
Yeah. So also to your point, the reason why we were buying during the pandemic was multiple reasons. One, I really believe that there's going to be some disruption in single family housing with affordability and forbearance. That's number one. You can go on blackknight.com and you can see that there's millions and millions of people behind on their mortgages. So that's going to make its way through the system. Probably the majority of them are going to move into rentals. And that is going to put pressure on rentals. That's number one. Number two, we were already undersupplied for housing. If you go back and look at the multiple studies that there are about housing, we've literally been undersupplied for the last 10 years. And there's a lot of reasons for that, not just the cost to build them. There's the land costs have gone up, the cost to build them have gone up, the city requirements and density and zoning and all those things have become more difficult. So less housing has happened. So that's created a supply issue. The other thing is, if you think about it, nobody's raising rents during a pandemic. So the apartment industry and the rental housing industry had a rough go. They said, tenants don't have to pay you, and they're not raising rents on folks during that time. So we've had a year and a half of pretty flat rent growth, obviously. So you have all those factors happening at the same time. Now you have, going on a year and a half to 2 years of delayed rent growth based on new demand and short supply. I did a video on YouTube that I really believe that these next few years are going to be real tough for tenants. It's not going to be good, actually. A landlord does not want to have a market that's so out of balance. It really doesn't. It's not good for anybody. But what we're already seeing is $300, $400, $500, $600, $700, even $1,000 a month in rent increases. Now, I know those are big numbers, but it's true. I know for a fact it's true. Just in Scottsdale here, we're seeing $700 to $1,000 a month. So somebody's, let's say, was renting for $1,000 or $1,200, it's close to $2,000 now. So those are as they turn. So the cat's not out of the bag yet on where all that's going to be. But the point is, I guess the question you had initially was about rent inflation. I don't think it's as driven as much as all the money printing, as much as the supply and demand issue. Then you tack on the last piece, which are these crazy, unique migration patterns based on what's happening, the policies of these individual states. Never before have I been so interested with who our governors are,
Right.
Like they've never been as important, and they are important. So people are voting with their feet. They're voting with their pocketbook, and they're moving to places that they think are going to be stable, safe, and aren't going to get hammered on the tax side. We already know this is happening. So I'm talking about Texas, Arizona, Florida, as an example. North Carolina, Idaho, those are happening. It's not an opinion, it is a fact. And so that's creating, again, more demand in those markets with the existing supply, and it's driving rents up. And so the prediction, which is ridiculous, is that Phoenix alone is going to lead the country with 18% rent growth. I have never seen, I was in Austin in the early days, we were getting 8-9% a year, and we were like, holy cow, like this is crazy. This is double that. It's going to be interesting to see if it really happens, but there are lots of markets that are projected, mostly in those states I mentioned, that are going to see some very significant rent growth. It's not going to be good because all of a sudden it hampers the affordability in that market. It hampers the traction by employers and all the things that people have when things are in balance. A better housing policy is that equal supply. In my opinion, there needs to be about 6 months of supply of single-family housing at all times on the MLS. That's been proven year over year over year. And that keeps things kind of in check on a slow appreciation. That has not happened. And the same thing with rent. What we have is this potential real problem that's going to show up later. And some of the states are going to adopt pretty aggressive rent control, things like that from an affordability side, or the government's going to throw money at people. So you mark my words, it's going to happen in the next 2 years.
So many great takeaways there, Ken. Yes, in the health crisis, we really found out the true colors of a lot of state governors, as they were often front and center in the national media. People really, like you said, get to vote with their feet. And yeah, I think you make an interesting point with this rent inflation pickup. I think part of what is leading to that rent inflation, and you touched on it, is that in the years 2018, 2019, and 2020, rent growth was really tepid, really slow. And now it seems to be catching up all at once. And of course, all of this is demand driven. Depending on your source, we're about 5 million housing units short. And there are only about 130 million homes in the United States. So that's about a 4% shortage right there. People just need a place to live, whether it's a place to rent or a place to own. And that low supply helps drive that demand comparatively. Well, Ken, you've just been a lot of great takeaways here. You've got that big picture view because you do own so many units yourself. You don't have to go read studies from somewhere else, and you can really look at your own numbers deeply and give our listeners insights that way. If someone wants to learn more about you, I think a lot of our followers already know, but you ought to remind them how they can do that because you've been giving out the value for decades. So tell us how one can learn more about you, Ken.
Thank you. The best spot is to go to kenmcelroy.com, and all the resources are there. We've got a great podcast. We've got a really, really good growing YouTube channel. I'm really, really focusing on trying to bring in amazing guests to help people create wealth for the long term. I've got all the books and stuff that I wrote. All that money goes to charity. I have a full-time philanthropy director actually just giving away money all year. Literally, she's on our payroll. It's really, really fun for me to own all these properties. We now have over $1 billion worth of assets. My partner and I, Ross, it's a blast. I mean, we're building 4 or 5 projects. We're going to be growing at, say, 1,500 to 2,000 units of acquisitions a year. It's a great time to be in this business. Even now, everybody's kind of waiting for the top. The rent market is about ready to take off. And I talk a lot about that on kenmcelroy.com.
Well, Ken, you're always expanding your means. Thanks so much for coming back onto the show.
My pleasure, Keith. Always good seeing you.
Oh yeah, it's always good to listen closely to what Ken has to say. He does not think the end of the eviction ban is going to be as big of a story as some think, and that really is how it's starting to unfold. One reason for rapid rent growth like we're seeing this year, that's really because rent growth was pretty slow in the past few years, so it is playing some catch up now. Ken is such a quality person and savvy operator in real estate. Be sure to check him out. Signing off from Birmingham, Alabama today, I'm your host, Keith Weinhold. I hope to meet you in person at this week's terrific New Orleans Investment Conference. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.